You really, really suck at trading. You may be wondering why I'm just so close here. I really need you to know this. I need you to hear just my deep, sexy voice telling you how bad you are at trading. And you're not bad at trading because you suck at predicting where the market's going to go, even though you kind of do, but that's not the point. The point here is not because you're bad at winning. The point is because you are bad at losing. Imagine here for a second if you were able to take losses so painlessly that you could lose 2, 3, 4, 5 trades in a row and not have the slightest bit of doubt about your profitability and your trading approach. The only way you make money trading is if you make more on your winners than you lose on your losers. And in this video, I'm going to teach you how to take trading losses painlessly. I'm not a complete freak, so zoom back out the camera here. I'm shining these really bright lights here into my face. That way you can really just see my bald, shining head of truth and justice. But it would be too bright for me to just share. So I just have to keep all my wisdom locked up in here so that way you can't see it. But in all seriousness, no. A lot of people can have a 50 to 60% win rate, but a lot of people lose like double or more whenever they lose versus what they make on their winners. If you are able to take trading losses painlessly, this means you get into a trade thinking that one outcome is going to occur. Don't even bring in smart money, liquidity, bank manipulation, Wagyu beef, fair value distribution gap, Wyckoff schematic, bank manipulation, stop hunt, bullish Kobe steak, medium rare candlestick strategies. Because you don't know where the hell the market's going. You cannot predict price. It is completely random. Just my opinion, not financial advice. Everything I say in this video is just for entertainment purposes only. I've been trading 8 years. I've made millions of dollars trading. So I feel like I'm uniquely qualified to talk some shit about whatever I feel is the truth. And in this video, the truth is that you really suck at trading. And I'm going to try to help you suck slightly less at trading. You're still going to suck at trading. But I'm going to show you a risk structure that you can use. So that way you can virtually ensure that whenever you do lose, you can lose painlessly. You can lose a small amount. And whenever you win, you can win a little bit bigger. If you just make a little bit more on your winners than you lose on your losers, and you have roughly a 50% win rate, which is like random chance, literally, then you can be profitable trading. Take what I just said as a fact. And here's why. Because it is objectively the case. If you take 10 trades and you win 5 of them and you lose the other 5 of them, but on the 5 of them you win, you just make a little bit more than the ones whenever you lose the 5 of them that you lose. It's like saying you take 10 trades, you risk $100 each, and whenever you lose $100, so you've lost $500 on the losers, but whenever you win, you make like $150 on each winner. So, you make like $750 whenever you win, or, whatever it is. Bad at math here. Just saying, whenever you make more on your winners than you lose on your losers, even with the 50% win rate, you're profitable. Let's go ahead and get right into it. Here's how you take trading losses painlessly. A big portion of taking trading losses painlessly is remembering that there is always going to be another trade right around the corner. It doesn't matter if you're trading the weekly time frame, the monthly, the yearly time frame. Sometimes I like to look at the 10-year time frame just to see where the candle's closing. That way, a couple decades from now, whenever my children's are taking trades that they've inherited, paying all the ridiculous swap fees and commissions from the trade that I had entered 60 years before, I just really want them to be able to look at the 10-year time frame and sometimes even go to the century time frame to see how the 100-year candle's closing. No matter what time frame you trade, this can work on the 1 minute, 5 minute. It can work in a combination of time frames. I use the daily all the way down to like the 1 minute, and I just kind of put everything together before I get into trades. Whatever you are using, if you structure your risk structure in such a way that positions you to make profit long term, whenever you lose, it's really no big deal. You almost don't even care. Like seriously, you lose, you go to the next trade, you lose, you go to the next trade, you lose, you go to the next trade. Then you have a series of wins, and then whenever you have a win streak, you just make more on the win streak than you lose in the losing streak. Let's get right into it. So I'm going to take a random buy position tool here, okay? We're going to zoom out. We're going to say that for some reason, whatever the case may be, we just think price is going to go up. Maybe you look at this and you're like, you know what? We're in an uptrend, so I think it's going to keep going up. And then on top of that, we're at support. So you just, for whatever reason, again, you could do whatever the hell you want. You could say, you know what? I think we're at resistance and going to make a head and shoulders pattern. And so I'm going to sell there, or I'm going to wait for it to pull back more because Nick's zone is stupid. And I think that this zone is better. So I'm going to wait and then I'm going to buy right there. Whatever the case may be, you're going to be right half the time. You're going to be wrong half the time. Okay. It's no big deal. Let's just say, for example, you just think, I think it's going to go up. Okay, cool. So you buy. Here's how you position your risk structure. Just start off with an entry at the zone. invalidation below, so stop loss below the zone, and then a target just of at least a 1-to-1, right? Whenever you start getting more experience in optimizing your trading approach, you can always increase your risk to reward ratio depending on what your metrics and your stats are. You will learn all that with experience. You have to do this shit. You have to give 2% of a shit to just take the time to take trades and see what happens over and over. And then over time, you just do more of what works and less of what doesn't. So when you start with the 1-to-1 risk reward ratio, you essentially are already beginning with a break-even system. Considering 70 to 90% of people lose money trading, this is a hell of a lot better than all the crazy, like, smart money, bank manipulation, Wagyu beef, fair value gap bullshit you could learn. I'm just saying, this is like dirt simple. Yes, everything works. Okay, cool. However, if you just keep things simple, you control risk, you're starting with something that already is break even. Slow clap. Slow clap. You're a break even trader off the bat just by entering randomly on the chart with a 1-to-1 risk reward ratio and holding it to profit or stop loss. However, here's what you're going to do. You're not going to do that. And I'm going to zoom in just so I can really get in here with the secret. You're going to be a little bit smarter than that. You're going to have a special idea. When you get into the trade, if you think that it's no longer going to move to the profit target and that it's a little bit more likely to move to the stop loss, for whatever reason, you can make this shit up, whatever you think. If you think that it's no longer likely to work out, simply close the trade. Now, a lot of you might be wondering, okay, what if I close the trade? What if I enter this trade, Nick? I do what you say. I take your non-financial advice, just general suggestion for education and entertainment purposes only, and I close the trade whenever price moves from here, my entry down here back into the support zone. Well, okay, so you close the trade, you take the loss. Now what happens if it starts to bounce up again? And you think, see, I knew it. The price was going to bounce there at support, but I got scared, so I closed because Nick suggested that I close the trade as generalized non-financial advice. He said, close the trade if you think it's not going to work. I thought it wasn't going to work, so I took his suggestion and I closed the trade. But it just started bouncing again. Here's what you can do. Here's the special idea. You just simply re-enter the damn trade. That's all. If you still think it's going to work, just re-enter it. There was literally one trade I got into last week where I tried the same trade 5 times before it finally worked out and then the move finally played out. I took break evens, I took small profits, I took small losses in the basket of trades, but finally when the damn move started playing out, I got back in. You should never be uncomfortable in a trade. If the market is not doing what you want it to do, simply get out. That is a quote that I heard years ago back when I started my trading journey in the year 2016 from a person named Timothy Sykes, the stock trader guy who trades like penny stocks or some shit like that. He said, you should never be uncomfortable in a trade. If you're uncomfortable, get out. The moment you think price is no longer likely to move into profit, meaning it's just literally going against your position, just exit and keep it in the back of your mind. If it starts bouncing back up and looks like it's going to go back up again, you can just re-enter. So say you do that again. Say you re-enter this trade. Okay, sweet. You re-enter this trade, it pops up into profit a little bit, then it pulls back into the support zone. So then you close there at the support and you're like, damn it, now I think it's going to break down below this zone, so you get out of the trade. Okay, sweet. So let's say that it does this stuff, it looks like it's going to break below, but then it starts going back up here, making some higher lows, makes a higher high past the recent highs, pulls back, makes a higher low, and then starts going up. So now you think, this looks like it's going to go back up again. Well, guess what? Here's another special genius idea. You just re-enter the trade if you think it's going to go up, right? All these times you're having a similar stop loss area, right? I call this an invalidation because I don't trade at hard stops. Most times I exit before the stop loss is even hit. A lot of my trades are just break even or small loss. Worst case scenario, 1 unit of risk is what I lose. I risk $5,000 per trade. My average losses are $2,000, $3,000, $4,000. Net average, on average. Because this counts break evens, this counts losses. But whenever I win, I typically just make a little bit more than I win. I've made $90,000 the past 6 weeks trading Forex. And I've called every single trade in my Telegram channel, which you can click the first link in the description of this video. If you just literally want to follow my trades for free, it takes you to my website. Click my free Telegram channel right here. There's 57,000 people in there following my damn trades every single day. And I show literally everything. I show my live trading terminals. I show my entries, my exits, like literally all the analysis, everything back to back. Just join it. It's real quick. You could join it and just follow all my shit. I've been running that Telegram channel for free for 5 years. So let's say you get back into the trade and you think price is going to go up. So you get into this. And then let's say finally it just starts moving into profit. if it's moving into profit and you had kind of a final target level in mind, you think, okay, if the uptrend's going to continue, it's going to probably go to the previous high because you had done all this analysis and shit. And you think, okay, it's probably, if it goes up, it's probably going to at least go to that previous high. More than likely, it'll probably make a higher high, but you're being real safe here because you're a wussy is what you are. I would be a little bit more vulgar here, but I'm trying to keep this somewhat family friendly. I'm only going to cuss a little bit. So whenever price goes up, you think it's going to go to the previous high. So let's say it gets to the previous high and you close the trade around a 1R. So this would be around a 1R profit. So whatever you risked on this trade, let's say you risked $1,000, and we're going to calculate how much you would have made or lost in this whole basket of trades. So if you risked $1,000 on each of these trades, you're going to figure out what the distance is from your entry to your stop loss or invalidation. You're going to go to the MyFX book position size calculator or whatever the hell you use. You're going to calculate the lot size, and then you're going to get the lot size. You're going to risk exactly how much you want to risk. I got a whole video on this on my YouTube channel called How to Choose the Right Lot Size. If you want to see a whole video teaching you how to do it. Very, very simple. So say you risk $1,000 on each of these trades. This one, whenever it lost, it was about halfway to the invalidation. It was 121 pips, so it's about 40% of the way. So in this one, you would have lost $400 if you entered up here and then you closed it down here, about halfway to the inval. So $400. This one you would have entered, had the same invalidation, right? 120 pips down there. This one was closed at a 33 pip loss, so about a little under a third. We're just going to call that, let's call it $300 loss, right? So you lost 400, then you lost 300. You've lost $700 on these. But when you finally got this last one play out, this one won $1,000. Now, let's do some very simple math. 1,000 minus 700 equals $300. So you've made like 0.3R, which is still technically a net profit. Imagine if you just simply made a little bit more when you were right versus what you lose when you're wrong. It comes from losing in a very good way. You have to be a good loser to be profitable. Even if you can predict where the market's going to go 90% of the time and you have a crazy huge win rate, but if your wins are much smaller, but whenever you lose, the losses are huge, you're still not profitable. It doesn't matter. All that matters is making a little bit more whenever you win a trade versus what you lose on average whenever you lose a trade. You're going to have some winners that are less than your original ideal profit target. You're going to close a lot of trades at break even. This is all back and forth. But if you can make it to where the total basket of your trades after taking like 100 trades, if you can make it to where your average win is bigger than your average loss, even with a random chance 50% win rate, you will still be profitable. And I'm not speaking out of my ass here. You can do the damn math. A 50% win rate. You win half the trades and lose half the trades. But on the ones that you win, you've made a little bit more total than you've lost in total on the losing trades. That is a profitable trading system. And guess what? You can literally start with you can literally start with a break-even system by just doing one-to-one risk-reward ratios at just literally entering randomly on the chart. I'm not saying you should enter randomly. I'm just saying like you could literally do that, and you would hypothetically have about a 50% win rate after a lot of series of trades. And then this would increase your profitability because you're already going to be above 70 to 90% of people who are losing money trading. You're going to start with the break-even system, then you can build and optimize it up from there. Let's go through one more example. In fact, let's go to a trade that I literally took. And I'll show you how I make more winning trades than I lose on losing trades. Let's go to a trade that I literally took here on Friday. So this was my day on Friday. I made $7,000, so a little over 1 unit of risk, about 1.5 units of risk because I risk $5,000 per trade. Let's look at what my average losses are versus what my average winners are. So what I did is I took 2 trades on Friday, and then I had 4 entries on one trade for EU. And then I had 2 entries on one trade for NZDJPY. So meaning NZDJPY, this was one trading like setup. This is one like trading idea. And then Euro USD, this was one trading idea, but there was just multiple entries within the trading idea. So 6 individual trades, but only 2 trading ideas. So out of the 2 setups, I had a 50% win rate, right? So I lost 1 trading outcome, and this was so a little over $7,000 I lost from that. So a little over 1 unit of risk on both the positions, $7,000. But whenever I won like 15 grand on Euro USD when that one spiked into profit. Now, you may be looking at this. This is crazy. This is just insane, right? But it's very simple math. I had a 50% win rate, and then I just won a little bit more than I lost. That is it. Let's go and actually look at the specifics behind this, because like this is an account I started at $100,000 a couple weeks ago, and I'm growing this account to to $300,000. I actually started this account 2 months ago, so a couple of weeks. It's been like 8 weeks. And actually, I started off, I lost money on this account too. This account went from like 100K down to like, I think it was like 60K or lower. And then I grew it back to 100K. And then now it's in profit of 141 grand, including like close to $20,000 in commissions and swap fees. Absolutely insane. So here is the trades that I took, and I'll show you how it all works, right? Very simple analysis, right? Here's New Zealand dollar JPY, the trade that I lost. I looked at the chart. I looked at all the time frames. I looked at the daily 4 hour, 1 hour, 15 minute, and I just thought it was going up. It just looked like it was making higher highs and higher lows. It had broken above and retested some recent support resistance zones. Everything kind of just pointed to like, okay, you know, I looked at the chart and I thought it was going to go up. Why don't you look at the damn chart and you tell me what you think? Here's the 4 hour chart. Let me just remove all the drawings here. Let me just minimize my face, you know, because I've already been yelling at you this whole video. Look at this shit. Like, what do you think's going to happen, right? Like, I don't know. It just looked like it was making higher highs and higher lows. Of course, you're going to have everybody saying, oh, it's at resistance. It's like, yeah, I know it's at resistance. So I tried to bounce there once, 2, 3 times. It's failed to bounce. It's still going up, still making higher highs and higher lows. I just thought it was going to continue up as well on Friday, right? And I was wrong about this. Wherever I bought, it ended up breaking that recent low, and then it pushed down and made a little lower low. Still technically valid on the higher time frames, but it just didn't work out for that specific moment. It's okay. It was a small loss. I had another big win on EU. So when it comes to this, since I just thought it was going to go up, I'm like, all right, well, I got to get into this, and I got to figure out a way that I can control risk, right? So whenever we go to the minute 5 chart, which was the time frame that I looked at to enter, this was where I entered. So I entered back here as it was going up. And where did my invalidation go? My invalidation went, let's literally look and see what it was. This is my close friends group where I call literally all my trades live with the full details, and people can ask me anything. So that way they can get questions and answers and stuff. This group is, if you go to the link in the description is my website. It's this first product here, MFX Close Friends. So this is the website right now. This is everything here. $250 a month. It's an expensive product. Don't do it. Go and follow my free Telegram channel for a couple months for free. You can see everything for free in there. You don't have to pay me for anything. I literally teach all my shit for free here on YouTube. Close Friends and all my paid products is just a way for you to get more support and get help with implementing things and seeing it all live and being able to ask questions and stuff. But I'm just showing you just so that way you know it's transparent. I've been running this group for over 2 years, my free Telegram channel for 5 years, and I've been trading for 8 years. I've been doing this shit a long time. So that being said, I bought right here. I put my invalidation underneath the recent 2 lows. So it was essentially like that zone there. And then it was underneath that low and that low. And then as price went into profit, I added to it. And then whenever I added to it, it stopped going into profit and it went against me. And I ended up closing it right here. And if you don't believe me, here's my entries. There's where I entered. There's where I added. There's the minute 5 chart. This is what it looked like. This is where I added. All this is time-stamped. Everything's time-stamped in real time. And then you'll also see this is where I got into EU. I took an EU trade. Everything looked like it was going down. I put them short EU. 20 lots, a 25 pip stop loss area, and a 5K risk. Again, for stop loss areas, I call it just invalidation. So it's just what I say. Since I don't actually use a stop loss, people will get so confused. They'd be like, Nick, you said the stop loss was 20 pips, but you didn't put a stop loss there. What the hell, bro? So I started calling it like, what is this location I'm referring to? Well, it's the location at which the trading idea becomes invalidated. So that's why I call it the invalidation zone. Very creative. I know, very creative. Slow clap for me. So that being said, I thought Euro USD was going to go down. Price was going up in a nice trend. We tried to make a higher high. We pulled back here, tried to bounce twice, failed, started making lower highs, made a lower low, lower high, lower low, lower high, and then started going back down. I just creatively thought, all right, well, I guess price looks like it's going to go down now. We've had all these opportunities to go up. We've cracked out of the recent trend. We've made lower lows and lower highs. Literally barely doing any technical analysis. You'll see how fancy my analysis is here. We've got like 2 random zones and then an upwards line and then a downwards line. And they're not even trend lines because they're not even connected to the price highs and lows. They're just literally drawn there on the chart to illustrate like, hey, I think this is going down right now. Let me just draw like a downwards yellow line just to show, right? So damn simple. You just look at the chart. Again, you don't even need any analysis to decide which thing's going to happen because it doesn't matter. You're probably only going to be right half the time anyway. So it doesn't even matter what you think is going to occur. All that matters is if you're actually just getting yourself into trades that have a good risk structure and then managing those trades based on the context of price action. And you only get this by experience. So you just literally go to the chart, take whatever the hell trades you want, start with just a 1-to-1 risk reward ratio. You can always change it later and optimize it down the line, but just start with that. And then once you get into the trade, if it starts moving against you and you think it's going to go all the way to the stop loss or the invalidation area, just close it. Just take the loss. You can always simply just re-enter it. It's not painful. It's all in your head. It's all psychological. It's not that big of a deal. Start risking something stupid like $5 per trade or $10 per trade, or one, if you can, $1 per trade. I don't know if you'd be able to do that with you need like a 10 pip stop loss with a 0.01 lot size, but whatever it is, risk a low dollar amount. For F's sake, start on the demo account for a couple months and then just get some experience, then move to a tiny live account and then do all this, whatever's comfortable for you, right? You know what's best for you. Unless you're a complete idiot, then you probably don't know what's best for you, and you're going to have a lot more important things to worry about than trading to begin with. But if you have half a brain, just risk whatever is comfortable for you that's within your risk tolerance. Trading is risky. Most people lose money. You're probably going to lose money. I've already told you a million times in this video, 70 to 90% of people lose money trading. If you start with this is at least break even, okay? Don't sue me, bro. Let's go ahead and let's get back into it. So I thought EU was going to go down. So I entered. I added a sell after price showed me evidence and confirmation that price was in fact continuing down. So I just added, adjusted my invalidations a little bit. This was what my terminal looked like at the time. I was still in NJ. I put closing New Zealand dollar JPY here, and here's where I closed. You can literally see on the 1 hour, I had bought up there thinking that price was going to continue upwards, right? That didn't work. Price came, it broke below this zone, it closed below that zone. There was just multiple reasons that I was like, you know what? I don't think this is going to work out anymore. I just took the loss there. You know what my plan was? Is if it goes down and then it starts bouncing upwards again and going back up, well, guess what? Very insane. If I close it at a loss and it just starts going back up and I still think that outcome's going to play out, I'm just going to get right back into the trade. You can call it revenge trading. You can call it FOMO trading. You can call it not having mental fortitude or whatever the hell you want to call it. All I'm saying is that since you don't know what's going to happen and it's just 50-50, just do whatever price is giving you evidence that it's doing. Of course, you're going to get this with experience. So in the beginning, just do whatever you want and then just learn through the experience. Then over time, just start doing more of what seems to be working and do less of what doesn't seem to be working. But once you get the experience, it just becomes a matter of like the next trade could be a win or a loss and you just really don't give a shit. And the next trade that you take, regardless of whether you're on a huge win streak or a huge losing streak, you can take that next trade because you're not influenced mentally and emotionally like a little baby crying like, I lost the last 3 trades. I'm on a bad losing streak, so now I'm not going to take this next trade because I just have a stupid arbitrary rule like, oh, I can't take more than 3 losses in a day. That's my max daily drawdown limit. And then you're too much of a, I try not to cuss here, but you're too much of a wussy to just say, you know what, yeah, I lost 3 trades. That's going to happen in trading. It's a 50% win rate. If you literally flip a coin, there's many times you're going to get way more than 3 heads or 3 tails in a row. If the heads are winning trades and the tails are losing trades, there's going to be plenty of times you take 3, 4, 5, 6, 7 losses in a row. You just can't be a little biatch about it. You can't be a wussy. Just take the loss. You can always just re-enter it. Literally like a minute later, if you close and then it just starts pushing back into what would have been huge profit really quickly, you can just re-enter the trade. Sure, you took a little loss, but as long as the average losses are smaller than the average wins, it's okay. You should hold your wins to wherever you think the final location is they're going to go. In a trend, it usually at least goes to the previous high. If you want to have a little bit bigger cojones, you can hold it to a higher high. The same thing vice versa for downtrends. Here's what I did on EU. I held EU to a lower low because the trend was intact. So I got out of NZD-JPY. I took that as a loss. That was a $7,000 loss. And then I remained in only Euro USD. So as price continued into profit, Euro USD made a lower low. Now, a lot of people, they would just be getting out of the trade right there. But me, what did I do? Complete degenerate FOMO gambling mentality. Do not care. Price was showing me evidence it was going really far down, and I thought that price was likely to go all the way to the previous support. And I thought, man, you know what? We're probably at least, if the trend continues, going to get to that low before pausing. And price was like down there at a lower low. So I was like, we're probably going to go a little bit more. But best case scenario, we can go all the way down there if price can just quickly break that zone. So I was just simply going to watch what price did whenever it got there, just see if it broke the low, and then try to get in, make a context-based, intuitive decision. Again, you're going to learn this with experience. If you're looking at this like, how would I know? You're not going to know. Just start with the 1-to-1 risk reward ratio, watch what happens, do this for a couple months, and over time you start to get that feeling like, okay, this looks like it's going to be continuing to the profit target, so I'm going to stay in that. Meanwhile, this trade over here, that looks like it's probably going to lose. Let me just cut that right here. You're going to learn this through experience, okay? That's the whole thing. So I stayed in EU. EU kept going. It was just going crazy. I was complete degenerate on Friday. I 4 positions. There's one trade on GBP CAD, I think. I had like 5 positions at one point. This is last week. This is just really crazy. So $7,000. And then whenever it kept pushing into profit, I put right here at 8:42 a.m. This trade lasted like 2 hours. That was it. New Zealand dollar JPY, maybe like 1 hour. And this trade was like 2 hours. So I got the alert to close, and I closed Euro USD, and this is where I closed. I closed at a $15,000 profit. Now, from some fancy math again, 15,000 minus 7,000, it's about 7K profit minus swaps and commissions. And we had a dude who fell asleep on the live session, because I do live sessions every day in Mission FX. No matter which Mission FX product you buy, because we have 3 products, you get access to the live sessions we do every day. I literally trade live every single morning. I've been doing this for like 2 years. 7 a.m. Central Standard Time is about when I start the sessions, and we go for like 3, 4, 5 hours. I just trade live. We all hang out. Anyway, we had a dude taking these trades asleep, slept through the whole thing. We were trying to wake him up. We did a bunch. I put the closed terminal in here. This was the closed P&L. I showed you for Friday. And then, we were trying to wake this guy up, this Christian guy, and he finally woke up, and he was able to close his trade in profit as well. And we all celebrated on the live session because my boy Christian was able to wake up, with his headphones. I think somebody started yelling into the microphone because he still had his headphones on. Literally, the dude was asleep on the live, so you got to give him some credit, right? He's at least trying, right? He has his headphones on. He had his micro. he was able to wake up, and it was good, so it all worked out. The moral of the story here is the only reason that I'm profitable is not because I'm fancy and not because I'm a good trader, because quite honestly, I think I suck at trading. I don't consider having a 50% win rate being amazing at trading. The reason that I make money trading is because of the risk structure, the way that I approach controlling risk. It is not because I am a good winner. It is because I am a good loser. I take losses painfully. That was bad. I take losses painlessly. And because I take losses painlessly, it allows me to make more on my winners than I lose on my losers. And it also allows me to make rational, logical, super chill trading decisions. I have no problem losing 3 trades in a row and then entering that same trade a 4th time if it shows me evidence that it's going to start trying to go back into profit. You have to be able to do this literally nihilistically, degenerately. People will think you're like a gambler until you might as well go to the casino. Well, you know what? In trading, if you use a 1-to-1 risk-reward ratio and you cut losses a little bit early and you let runners run a little bit further, you have way better stats than a casino. And then it's just an objective reality. You win 50% of trades, you lose 50% of trades, but you make more on the winners than you lose on the losers. You are a profitable trader. And that is an objective fact about reality. It's not me just saying something ridiculous here. If those stats are true, and you can make those stats true through learning the skill set of trading and learning how to be a good loser, that will help you be a good winner. And a good winner is making money consistently profitable over time, minus a couple weeks and a couple months throughout the year where you might have like break even or down months. The average trader has 2 to 3 down months per year. But as long as you do this over time, long term, you make more than you lose. And that is a profitable trader. It's because you can control risk, because you are a good loser. So at the beginning of this video, I told you suck at trading. After this video, you're still going to suck at trading, but hopefully you suck a little bit less and you can take your losses painfully. Being a good loser will help you be a good winner. And in trading, a good winner is making money long-term, consistently, and predictably. Hit the first link in the description, go to my website, join my free Telegram channel. You don't have to buy a single damn product from me, but if you do, I'll see you in the Discord servers and I'll see you on the live sessions. By the way, welcome all new Mission FX members, whether you're in the free Telegram or you're in one of our paid products. We had a ton of people join Mission FX this past month. It's been crazy. So I hope to see a lot of you new friends here in the Telegram channel, in the free one. I'd love to reach out and shake your hand, but it's like a YouTube video. So I can't really. So I'll just end the video. If you like this video, make sure that you do whatever you want. I don't care. I'll see you.